Well, hi everyone. This is an alternate version of exercise 11-4 from page 520 of the textbook, chapter 11, Reporting and Analyzing Equity. This transaction is going to take a look at stock issuance for non-cash assets. So in addition to companies being able to issue stock for cash or issuing stock for services like organizational services, or as we saw in the previous video, promotional services, companies also issue stock in exchange for other assets like land, equipment, and building. This is such an example. It says Sudoku Company issues 26,000 shares of $7 par value common stock in exchange for land and a building. The land is valued at $243,000 and the building at $375,000. We're asked to prepare the journal entry to record the issuance of the stock in exchange for the land and the building. Well, this transaction is pretty straightforward. Let's put up the journal. The first thing we know is the company is receiving land. And what is the land valued at? Well, it's valued at $243,000. And so if that's the value of the land based on an appraisal or some other document, then the company will record it at $243,000. Later, if they have reason to believe that the land is not at that value, it is a lower value, they may write it down, but for right now, the land is valued at $243,000, so the land is debited for $243,000. Likewise, the building is going to be debited for $375,000. Now the company is issuing 26,000 shares of its $7 par value stock for these items. First thing we'll do is we'll credit common stock for the 26,000 shares. But remember the rule. We're always going to credit common stock at its par value. So for the 26,000 shares at $7 per share, we'll credit common stock issued for the land and the building for $182,000. But since they receive an asset over that value of that common stock, the additional amount is credited to the account paid in capital. Paid in capital in excess of par common stock for the difference. So take $243,000 plus $375,000, the value for the land and the building, subtract out the value of par for the common stock of $182,000, and $436,000 is the amount of the plug that goes to paid in capital.